Good morning. Good morning, everyone. I appreciate you being here. I'm Phil Baker. I'm President and CEO of Hecla Mining Company. Hi, George. And I'm also the chair of the Silver Institute. I'm going to do something that I've not done before, and that's at this event is I'm going to introduce a couple of my colleagues who've come. And part of the reason for doing that is to just show the commitment to silver and the importance we see in this event. So Russell Lawler, our Chief Financial Officer, Stuart Absalon, our Controller, and Vita Mishra, our Treasurer and VP of Investor Relations. So thanks you guys for joining me. I wanted to tell you that we are really pleased to have you here. This briefing is something that's been going on. I don't know if it's been since the start of the Silver Institute, which was 1971. I got a little bit of a history lesson last night from Paul Bateman. But it is, the World Silver Survey is the most reliable report on silver, regardless of what others might say. And I want to thank all the Silver Institute member companies and the World Silver Survey sponsors for the support of this work and for supporting an event like this. And so let me recognize the executive committee members who are with us today. And these really is the team of people that are steering the Silver Institute. So we have Dale Andrus, CEO of Gatos. Diego, do you pronounce it Belledo or... How do you pronounce your last name? Belito. Okay. And he's manager of the trading department at Glencore. And then Mitch Krebs, president and CEO of Coeur. Where's Mitch? There he is. The undertaking of the research and producing a report of this caliber really takes a skilled and experienced team of professionals, and Metals Focus, which is a leading precious metals consultancy, has independently researched and produced this year's edition of the World Silver Survey. Just to make it clear, their report is not one that is driven by the Silver Institute. They are doing the work independently, and they come to their own conclusions. And this is the fifth year that we've had Metals Focus prepare this for us. And as I understand it, Metals Focus has a staff of about 30 consultants and employees in 8 locations around the globe. And they have really contact with virtually all aspects of the silver industry. So their breadth and depth makes them uniquely qualified to produce the report. And this morning, Philip Newman, Managing Director of Metals Focus, and Sarah Tomlinson, the consultancy's Director of Mine Supply and also a geologist for us miners in the room, will summarize what emerged last year's silver market and what we might expect this year. And following the presentation, they're going to take questions, but we are videotaping this. We will put this on on our site and social media. So we would ask if you have a question, that you wait for the mic so that it can be part of that recording. Now, before I hand hand things over to Philip and Sarah, I want to explain why I asked to be the chair of the Silver Institute for the second time. I am the first person in history to take this on twice. And firstly, I believe the Silver Institute's mission of providing a reliable, independent information on the silver market with the World Silver Survey, the other reports, publications, and programs is super important. And so I wanted to support that. Second, silver is essential for our future, and especially for energy, which is something we really didn't see the last time I was the chair. And we're going to hear more about the role silver plays in the critical end uses in just a minute. Third, when I was last chairman of the Silver Institute, frankly, investors had very little interest in silver. Since then, demand has reached all-time highs, with investors recognizing the unique value of silver, not just as an essential metal, but as a safe haven and a store of value. Fourth, and trust me, there's only one more after fourth, given the supply-demand fundamentals and the continued deficit, and notwithstanding the current $28 silver price, I believe the silver price will be significantly higher before the end of the decade. Now, that doesn't mean it's going to stay high. I think you'll have lots of volatility, but it is a very, very interesting time to be in the silver market. And then the final reason I volunteered to chair the Institute is because with all the changes in silver, I want to be part of changing the Silver Institute. So if you have ideas as to how to make the Silver Institute more relevant, more capable, more effective, please reach out to me or to the other members of the executive committee and give us your ideas. Now, the 2023 edition of the Silver Survey, 24 companies across the globe have made this publication possible through their financial support. So you can find the sponsors and the supporters on the front pages of the survey, and I want you to thank all of them for their support. The survey will be available for download this morning at no cost at silverinstitute.org, and early next week we'll post the video. So if you're not following the Silver Institute on, is it Twitter or X? Whatever it's called, you can go to @Silver Institute, and you can also follow us on LinkedIn, and you can also sign up for the complimentary bi-monthly newsletter, Silver News, and then you can get all the other reports on the silver market at our website, silverinstitute.org. So with that, please join me in welcoming Philip and Sarah.
Thank you very much. Well, thank you, Phil, and good morning, everyone. Before we get going, I just want to add the thanks of Metals Focus to the major sponsors, the sponsors, and the contributors as well, who, as Phil said, really make the World Silver Survey possible. So to crack on, what we're going to do is start with a few comments on the price. I mean, given the events of the past few weeks, and I guess the weekend as well, we could really spend much of the presentation talking about this and what we think is driving this. But the World Silver Survey is really looking at the key fundamentals for 2023 and 2024. So that will really be where much of the presentation looks at this morning. But in terms of the price, before the run-up that we saw over the past week or so, we saw the gold-silver ratio struggle to somewhat, really staying in the high 80s. So as the gold price has moved up, yes, silver has kept pace with that, but I think a lot of people may have expected silver to outperform. That's how it would normally do, given it's a smaller market, much more volatile. When gold is rising, you do expect silver to outperform to the upside. And I think one of the key reasons why it hasn't done so is events in China. We think about the crisis in the country's property market. There are lots of metrics we could have put up to really show that. The top chart is showing you the year-on-year change in new residential sales in China. And I think given how the market has struggled there for quite some time, that has really raised investor concerns about the extent of the recovery we would see in China's economy, what that impact that had on industrial metals. And again, I think therefore to some extent that has weighed on silver. Of course, that changed quite considerably over the past week. As we saw silver start to move higher, the gold-silver ratio come down. We saw investors really coming in, chasing the price up, and I think trying to really perhaps push it towards the $30 level. We saw the ratio come down to 82. It's popped up a little bit this morning, but you can see in terms of the top chart, which is showing you the net managed money positions, you can see the increase that we saw there for silver, and for the bottom chart showing you global silver ETP holdings for exchange traded products. And again, on the far right-hand side, you can see how we saw some fairly decent inflows over the past week or so. But as I mentioned, the Silver Survey is very much about the market fundamentals, and that's where we're going to spend much of our time. I'll give you a few very high-level comments. I'll then hand over to Sarah to go through various aspects on the supply side, and then I'll finish up with looking at the demand in a little bit more detail. But I think really the next couple of slides, really capture, some of the real key headlines and key takeaways from the report and some of the very important conclusions as we see it at Metals Focus. So the first chart, as you can see here, is really showing you over the past few years, 3 years in fact, how demand has really started to really outpace supply. And from my bullets, you can see we've broken it down into a couple of periods. 2010 to 2019, the average annual change in supply was minus 3% a year. And then from 2020 to 2023, it flipped to a very small positive. For demand, by the same metrics, the first part not too dissimilar to supply, obviously growing, but very modestly year over year. But you can see from 2020 to 2023 how that changed quite dramatically. Now, you may say, well, yes, of course it's going to do that because you had COVID and you had the post-recovery the year later. But that certainly doesn't explain everything you see there by any stretch. And so that really gives you this deficit that we have in the market through to 2023. Now, this is something that we've spoken about before, at previous launches of the Silver Survey, at the interim in November as well, that the market really has entered, a new phase of these ongoing and sizable deficits in the marketplace. If we package that a little bit differently, the bottom chart shows you that cumulative change in those stocks over that period. And so you can see just for 2020 to 2022 alone, that's a stock drawdown, a combined stock drawdown of about 580 million ounces. That is really quite sizable. And as you can see from the chart, is really quite a dramatic change from what we've seen just looking at from 2010 alone. So that, is one of the, as I say, one of the key takeaways I would suggest in terms of looking at the history. At the end of the presentation, I'll update this for our forecasts for 2024. But for the moment, I'd like to hand over to Sarah, who's going to go through mine production, costs, and hedging. Sarah, the floor's yours. Thank you.
Morning, everyone. It's good to be here. I'm going to take you through the key elements of mine supply for 2023, and then I'll have a brief look at what we're expecting for 2024. So if you look at our map, we show this fairly often. This is very orange compared to last year. Last year was nice and green. So our estimate is that mine supply fell to 830.5 million ounces during 2023. And this was primarily due to lower production in Mexico and China, Argentina, and Australia. In Mexico, we had lower production because of the strike from Peñasquito. In Argentina, we had mines that were processing lower grade ore. In China, there were 2 temporary suspensions at Jiama and Julong. And in Australia, we saw the closure of 2 base metal mines, Jaguar and Hera. In terms of the positives, we saw increased production from Bolivian operations, the lead zinc operations there, and also increased production from Chile as the La Coipa mine ramped up. There was also increased production from Hindustan Zinc, their lead zinc operations in India. If we look at the supply in a bit more detail, on the left-hand side, you can see a chart which is looking at the regional production. So again, you can see that there's a slight decline in production from North America. We experienced lower production from all 3 countries. So Mexico was down not just due to Peñasquito. There was also lower production from San Dimas and also San Jose and La Colorada. moving to Central and South America, there was actually increased production during the year, and that was down to Chile, increased production in Chile and Bolivia. Production from Peru remained relatively stable year on year. If we look at Asia, as I mentioned previously, that was impacted by the lower production from China, with those two closures at Jiama and Geelong. At Jiama, there was a tailings dam overflow, and then at Geelong, there was a safety incident. That lower production then outweighed any production, the increase in production that we saw from India. Then if we move to the CIS, we had higher production there. That came from an increase in output from Kazakh's Zyrem mine. And then Europe. Europe was stable production. We had stable production within Poland, but there was lower production from Sweden. We saw lower production again in Oceania as the suspension of those two mines in Australia outweighed increased production from Papua New Guinea. That was from Harmony's Hidden Valley. And then finally in Africa, we've actually seen an increase in African production. We've got the Zagunda mine from Morocco is ramping up its production currently. And there's also Khoemacau, which is a copper mine in Botswana, is also ramping up its production. If we look at the chart on the right-hand side, we've got the top 10 countries listed there. So in terms of Mexico, it's still still the dominant producer. It was 202 million ounces last year. There was the loss of production from Peñasquito, but on the positive side of things, we saw increased production as Fresnillo and Mag Silver's Juanicipio operation ramped up. There was also higher production from Silvercrest Las Chispas. Las Chispas, due to higher throughput and higher grade. In China, as I mentioned, slightly lower production year on year, primarily because of the lower production from Jiama and Geelong. In terms of Peru, that was 107 million ounces for the year, stable year on year. There were local and national disturbances. And then also Hochschild's Palancarta mine was closed due to reserve depletion of the current mining area. Hochschild also experienced lower throughput at Immaculada because there was a delay in getting their modified EIA approved. In terms of the, let's look down there, we've got in Russia, that was lower production at 40 million ounces, and that was due to lower grade processing at Ducat. Polymetal have since divested Ducat and other Russian operations to Mangazea Mining. And then at the United States, production was 32 million ounces for the year. Again, that was lower. Obviously, there was the fall of ground incident at Lucky Friday and also the fire, so the mine was temporarily suspended. Countering that somewhat, we did have the ramp up of operations at Rochester. At Rochester, the processing plant was complete, and they're now processing ounces through the new leach pad. If we move on to silver production via different source metals, so production from lead and from copper mines increased during the year. So byproduct production accounts for just over 70% of all silver production. Lead production increased by 1% year on year and accounted for 31% of the production during the year. As I mentioned previously, this has been due to increased production from Bolivia and also the India lead zinc mines. There was also increased production from Peru, from Buenaventura's El Brocal mine, and also Volcan's Yauli. In terms of the increase in copper, That was coming from the ramp up of London's Candelaria operation and also Anglo-American and Glencore's Collahuasi. Both operations were processing higher grade. There was also increased production from Oyu Tolgoi in Mongolia, that's Rio Tinto's operation, as higher grade ore started to come through from their underground operation. Looking at primary silver, 28% of all silver supply was from primary silver operations during the year. And that was just a minimal increase of 0.6% year on year. So the negatives from Ducat and San Dimas and San Jose, as well as Peñasquito, outweighing the positives from Juanicipio and Las Chispas and Puna. In terms of the silver from gold operations, obviously we had the big impact there from Peñasquito. But on the upside, we had the increased production from La Coipa, and there was also increased production from Polyas's Nezhda in Russia. If we look at, moving on to costs, if we look at the all-in sustaining cost for 2023, this has reached their highest level since 2012. As you can see from the chart on the right-hand side, the columns furthest to the right, you see a big increase in the all-in sustaining cost and also the total cash costs. All-in sustaining costs was $17.8 per ounce, and that was driven by that big increase there from the underlying total cash costs. All regions experienced an increase in their all-in sustaining cost. North America had the highest all-in sustaining cost with $19.4 per ounce, and Asia had the lowest at $8.9 per ounce, benefiting from the input of byproduct credits from the lead zinc mines there. The increase in all-in sustaining cost had a big impact on the margins. If we have a look at the chart on the right-hand side, you can see the margins dropped to their lowest point since 2019. In fact, the margins were $5.5 per ounce for the year. That's putting quite a bit of pressure on primary silver producers. In terms of what's driving these increases, cost inflation has persisted. We are, the recent reports that have come out do say that it has eased throughout the year, but it is still there. And one of the things that is driving this is the tight labour market. Wages, because of the skills shortage, wages are increasing, and other employee-related costs are also climbing. There's also been some supply chain disruptions, which has been affecting consumables. So the costs of explosives have been increasing, but in terms of cyanide, that is just beginning to come down. I look at the costs in a little bit more detail. If we look at the chart on the left-hand side, this is the oil and gas prices, and you can see there was a big drop in oil and gas prices in 2023. However, they were still elevated compared to 2020 and 2021 and play a significant role and will do so moving forward in terms of contribution to costs. Talking about inflation, as I said, there was an easing of inflation throughout the year. Most producer countries reported a reduction in their local inflation. That would go some way to reducing producers' costs. But in Mexico and Peru, the currencies strengthened against the US dollar. So any benefit that operators in those countries would have seen from lower inflation has been negated by the increase in the currencies. In Argentina, there was the inflation persisted, and there was also a weakening of their currency. So any peso-denominated operations in those areas in Argentina are being negatively impacted. If we look at base metal prices on the chart on the right-hand side, You can see that copper and zinc are still continuing their downward trend. Lead is less so. You can also see there that gold, as we all know, moving up, being pretty rampant throughout 2023 and still going up. That was a benefit. The rising gold price actually offset any losses that we had from the lower byproduct credits from copper and from zinc. In fact, in terms of the margins, in terms of the benefit of that byproduct credits increased marginally to $19 per ounce. So, brief look at the global reserves of primary silver. So, in 2023, reported reserves fell. The loss in reserves of 273 million ounces, and that was primarily due to mining depletion. However, there were also changes in economic parameters within operations reserves, partly due to higher operating costs and also companies now using higher cut-off grades. That outweighed the increase that we saw in terms of increases in resources from exploration drilling campaigns. The chart on the right-hand side looks at the M&A for mergers and acquisitions activity for 2023. As you can see, virtually non-existent. We recorded one deal for $5 million, and that was AO Gold and Silver purchasing the Tazit property, which is next to their Zagunda operation in Morocco. 117 million worth of deals that were announced in 2022 were, however, completed in 2023. Most of the M&A activity that we're seeing within the silver space has actually been related to buying sort of gold projects or gold operations recently. Then if we have a look at hedging, the chart on the left-hand side, this is my personal favourite, a big drop. It's not just the lowest that you can see on the chart for the last 10 years. Hedging has reached its lowest point in decades. So I estimate that at the end of the year, we had 8 million ounces in the global producer hedge book. We've got only 4 producers that have got open contracts at the end of the year. There's been a significant shift from contracts that are usually 18 to 24 months. They're now actually at 12 months. So all of the contracts that you see within that column on the right-hand side will be expiring by the end of 2024. I think a couple of reasons perhaps for the big shift in hedging. The first one, the falling silver price over the last couple of years. Most silver producers tend to use options. Well, with that falling silver price and the premium that they have to pay for their hedges, it becomes far less attractive to enter into contracts. But also, a lot of the big hedges that were taken out in 2019 were from Peñoles and from KGHM, who were constructing Juanicipio, and also they're putting down a shaft at their Glogau, KGHM putting the shaft down at their Glogau operation in Poland. Those projects are obviously Juanicipio is ramping up and the shaft at Glogau virtually completed, so there's no longer the need for the companies to protect cash flow. If we have a look at the chart on the right-hand side, this is the silver supply that's under streaming and royalties, royalty contracts. Again, this also fell during the year. So the lower production from Peñasquito and also Antamina, which was affected by a cyclone Yaku, this had a big impact on streamers' volumes throughout the year. In fact, the loss in production drove Wheaton's market share in terms of silver ounces below 50% for the first time in an extremely long while. It also had an impact on Franco-Nevada's streaming and royalty contracts, but the other streamers actually were increasing. They increased their amount of silver ounces under contract. Triple Flag became the third largest streamer in terms of silver ounces. That's primarily due to their Mavericks acquisition. And then lastly, a brief look at mine supply for 2024. So you can see we've got a sizable increase coming from North America. We anticipate Peñasquito obviously will return to full production. Operations restarted in October. We've got ramp up of Keno Hill. The Rochester expansion is ongoing. And there's also new production coming online from Endeavour Silver's Terronera project towards the end of the year. The increase that we see there from Africa is also the ramping up of Khoemacau and also Zagunda. We expect Zagunda will actually surpass Imiter in terms of the number of ounces produced moving forward. Those increases in production are, however, completely blown away, I think, by the loss of production in Central and South America. That big drop is actually primarily underpinned by a loss in production from Peru. So we've got Hochschild's Pallancata is on temporary suspension. There's also the Tahoe Norte mine within Buenaventura's El Brocal operations is closing, and there's also lower production forecast from Yauli. So we anticipate that the silver supply will fall in 2024 to 823.5 million ounces. And with that, I will hand back to Philip.
Great, thank you very much, Sarah. So just to carry on the theme from what Sarah said, just to really summarise supply against demand for last year in terms of the changes, 22 versus 23, you have that small decline in mine production, which is taking global supply down very, very modestly. But you can see against global demand, even though overall demand is down year on year in 2023 versus 2022, you have that rise in industrial demand, which is hitting a new high for last year. As you can see, it's been offset by weakness in jewellery and silverware, physical investment, which for Metals Focus is the coin and bar areas. But even though those declines in red look quite sizable, for the physical investment, it's only a 3-year low. For jewellery and silverware, it's only a 2-year low. So I think it's really important to put some of those declines also into perspective. But as I said, we're going to focus a bit for the moment on industrial demand. And to do that, what we're going to do as well is look at some of the key changes we're seeing at the country level. I should say this actually is the totality for China and India over the past few years. These are two of the big heavyweights in terms of silver demand, and these two markets also saw the biggest changes in 2023. Hence why I think it's really quite important to highlight them. India really, after what was really a stellar record year in 2022, very unlikely that we would see that repeated last year. But in spite of that decline, again, you can see it's only a 2-year low for India. So I think, quote unquote, it's returning to much more normal levels. In terms of China, the blue bar, a record number for its ounces that it fabricated in 23. But as you can see, in terms of these two markets, pretty much offsetting one another. But this is where some of the big changes are concentrated. if we focus on the Chinese market, which was, again, racing away last year, that was very much what was happening in the industrial space. Within the industrial space, it was very much about the upside that we saw in the electronics. For the global picture, added almost 100 million ounces in just 2 years. Really quite staggering. And again, one of the key reasons for that, in turn, was what we saw in the photovoltaic market, where you can see, if you can make out for the green line on the bottom chart, that photovoltaics for last year accounted for about 30% of global industrial demand. And as you can see, though, just that, where it's been sort of racing away, it was around 15% just 2 years ago. So I want to spend a little bit of time on the PV market now. But I think what's really important, if you do get a chance while you're here now to look at the Silver Survey, you'll see for the industrial chapter, there is a lot of content about the other key areas of the marketplace. We spent a bit of time talking about the automotive, which is so important for the silver industry. We've introduced a focus box, which is looking at the artificial intelligence and what that means for the silver industry, not just now, but importantly, of course, going forward. But as I said, just for the next few slides, I'm just going to look at the PV market, which again is just going to the races and is quite an exciting industry, I think. So what we saw, this is a chart we've put up before, and I think the pie chart for 2023 shows you, I think, some of the strengths and maybe perhaps also a headwind or concern for the industry as well. We have more countries than ever that are installing PV, or at least 1 gigawatt. We've doubled, as you can see, between 2019 and 2023. So I think is the strength of the industry, that diversity of countries which are joining this industry, if you like. I think a potential headwind or something just to be mindful of is the fact that China last year accounted for, I think it's about 56%, it says, of global installations. That is really quite a concentration that we see in the industry. And it's not just about China dominating the install of panels. China also dominates the production of the silver powder, which is the line that you can see on that chart. So those bars there on that chart are showing you our estimates for how much silver is going into the PV market. And you can see that acceleration between 2022 and 2023. And this type of chart is really important for Metals Focus when we're thinking about where we should put our resources, when we're thinking about researching the market. And if you're familiar with how we go about this, we spend much of our time on the road, I guess, holding really confidential meetings across the supply chain. If we're thinking about the PV market specifically, then we are talking to the guys that are making the powder, making the paste, and of course the panels as well. Not just in China, although that's where the market is dominated, but we're doing the same in the US, Taiwan, Singapore, wherever the industry is based. That's where you'll really find us out on the roads speaking to these guys. And that really helps us in terms of trying to understand other points about the PV market that we'll come to in a minute. So this slide, I'm not going to leave this up here for too long. I think the Silver Institute will make this presentation available later, but also you can contact me as well. I asked our head of PV, who's based in Taiwan, for us to pull this together as much for my benefit as yours. It really gives you a sense of how the market has developed in China in terms of being reliant on subsidies, to having those subsidies being taken away, to seeing how the industry has developed over the past 2 or 3 years when you had the new 14th five-year plan introduced with those targets for 2030. And what you had really were the local provinces really supporting the PV industry in their jurisdiction in terms of exceptionally low cost for land. The banks in those provinces really supporting the industry with very low cost loans as well. The fact that these companies could take advantage of low cost electricity as well. So we saw this acceleration for 2022, for 2023 in terms of companies putting in place capacity. Now, although we saw this and the industry saw this, it was very difficult to think how much of that capacity would actually be used. So we ended up with, at the end of 2023, about, I think it's around 800 to 900 gigawatts of capacity to produce cells. But of course, we didn't get anywhere near that level. So there is a significant level of underutilized capacity in China for producing panels. But there's no doubt about it that all of us, if you look at the last year's Silver Survey, we were talking for the global market that we could reach maybe 300 gigawatts for 2023. Instead, as you saw from my previous chart, we finished with about 444. Really quite dramatic. And then to finish up on my last chart for the PV market. So this is where really, again, we're the team is out there meeting these companies, but we're very grateful and fairly reliant of our head of PV in Taiwan. He's from an industrial background. He understands this far better than I do, really. But what we're trying to show here is two really important elements when we're thinking about the PV market. The first one is the technology that we're seeing, which is really coming to fruition. So on the one hand, the new technologies use more silver, far more silver, than the old technologies. There's no doubt about it. That's not really a debate. On the other hand, though, thrifting is an ever-present part of the market for PV. Now, you may think, well, especially the past few years when the silver price was relatively low, and so well below the $50 we saw over a decade ago, why would you be thrifting? Well, still for the industry, it's an important component in terms of the share of the panel. So there's always that pressure on margins. Silver prices can be volatile. So it's something, again, that you have to manage if you're part of that supply chain. And so, again, this is why, from our point of view, it's important to get out there and really speak to the trade to find out what's really going on and to understand those year-on-year changes in thrifting. So the line on the other side, that is showing you the combination of the increasing loadings, the new technology, being offset by the developments, the progress in terms of taking out some of the silver from the panels. So you can see for 2024, it's possible at the moment that those two trends are offsetting one another. But if there's one thing that I've learned is that just the speed with which this industry adopts new technologies. You just look at the TopCon, which just a couple of years ago was like a footnote in terms of its market share, that green bar. Now for this year, for 2024, it dominates the industry. So the speed with which this market can move, I think, shouldn't be underestimated as well. So I think, we will put something similar up when we're back in November, and I think it'll be really interesting just to see how 2024 really panned out. So to move on, and for the other key areas of demand for jewellery and silverware, I've spoken earlier about the fact that Indian offtake returned to more normal levels in 2023. Understandably, that took these totals down year on year. But as you can see, excuse me, they are still, especially for jewellery, that is still a very respectable total. So again, I think sometimes you've got to be careful about looking at these markets on a year-on-year basis. And that's why for both of those, I showed you a figure that excludes India. So you can see for jewellery that if we take out India out, the decline is far more modest last year at just 3%. And yes, for silverware down 11, but as you can see, that's still fairly respectable compared to the minus 25 for the global total. For physical investment, which as a reminder is our coin and bar market, last year was a difficult year. So this, first of all, is from a coin survey that we've run for several years. We're very fortunate that the mints tell us in confidence where they sell their gold, silver and platinum bullion coins on a wholesale basis. And then we sort of aggregate this up. And really what you can see here, the key, well, there's a couple of things here. If you think about Europe, that sort of disappearing green bar that you can barely make out for last year, that's concentrated in Germany. You had a change in the sales tax structure in Jan 2023. You had the cost of living crisis kicking in. And although liquidations of silver were pretty modest in Germany, buying really dried up. So German demand absolutely collapsed. Now, this was certainly not unique to silver. So for Germany, the gold market has really struggled, not just last year, but also this year as well. Gold's a bit different, a lot more liquidations, a lot more secondary activity. But in both cases, in terms of hitting what the mints are providing, that's been really quite dramatic. For the US market, it's quite an interesting one. You had, on the one hand, more production last year from the US Mint, which before that was struggling a little bit. But you actually had a relatively, not quiet, but at times fairly subdued market. What changed things was the collapse of Silicon Valley Bank, the collapse of Signature Bank, where demand just exploded, went through the roof. And so that really provided quite a strong support to the market. Again, that wasn't just for silver the benefit, that was for gold as well. But again, we saw the US market also back off towards the end of last year as well. And that has certainly carried over into early 2024 as well. If we package it slightly differently, these are just now the country totals. So now we are introducing India into this, which is the dark area as well. So you can see for the US, the green one at the bottom, even though 2023 was again relatively, well, it was down year on year, it's still a pretty healthy total. And we also got to put that into context that, you know, from 2021 and 2 were outstanding, absolutely outstanding years in the US market, not only for volumes, but of course for premiums as well. But again, just to reiterate about Germany, the yellow one, you can see that has been such an important market. And again, you know, yes, 23 was abysmal. There's no other way to put it, I'm afraid. But before that, in previous years, it was also an exceptionally strong market. So I think we do have to put it in that sort of longer term context as well. And so we bring all of that together. These are the last couple of slides. Again, something Sarah's already spoken about in terms of supply, pretty edging slightly lower, but overall, I think fairly stable. But you can see that we now have demand picking up year on year as well. And so that really brings us to the last chart. Again, really picking up a theme that I spoke about, you know, very early on in the presentation with those sizable deficits. We expect the deficit to grow this year compared to what was already an exceptionally high deficit in 2023 as well. And then the cumulative drawdown in stocks, getting on for 760 million ounces in only 4 years, which I think is a pretty strong statement to finish on. I think really arguing really how robust the underlying health of the silver market has been, and really, from our point of view, will continue to be for the foreseeable future. And with that, myself and Sarah will be happy to take any questions. What I would say, sorry to interrupt you, because as Phil said, we are recording this, if you could, wait for the mic, so thank you very much for a good example, but if you could say your name and your company as well for the recording.
Hi, great. Thank you. Thank you for taking my question. Great presentation. My name is Chen Lin. I'm from Lin Asset Management. I have some profound interest in silver, especially in the photovoltaic industry. I think you had a great presentation, especially on this photovoltaic area. And the number actually is all right on both sides, except the conclusion. I've been talking to your Taiwan analyst a few times. So you are forecasting 29% increase of photovoltaic this year versus last year. That's exactly right. Because I got a number from InfoLink and Chinese Photo PV Association, about 30%, 29, right on both sides. But the silver demand, you only have 20% increase. The latest forecast from InfoLink and Chinese PV is 56%. I can tell you why, because you already, in your presentation, everything is right, including the TOPCon. You see the TOPCon technology increased dramatically, yes. And TOPCon, the number is there because you can ask the solar panel producer how much more silver you use per gigawatt, TOPCon versus PERC, it's about 60% more. So that's where the 3 times difference of their forecast versus yours come from. I don't know, I can't see. And when are you going to reconcile the difference, given they have been more correct in the past 2 years?
Well, as I mentioned, if you're in the presentation, the fact, as I said, our job is to go through the supply chain and is to speak to companies and to understand how they behave and how they react to the silver price, not just the past week, of course, but to the overall silver price, the fact that you have silver is an important share of the panel. And I think it's very important to not underestimate the impact of the thrifting. That is an ongoing thing. And I think, I think some people sometimes feel that thrifting is a bad thing. I would personally disagree with that. I think having thrifting at a fairly modest level year over year, it helps to reduce the sensitivity of the supply chain to the silver price. So in other words, if you have the ongoing gentle thrifting, and then as Phil spoke about the hope or the expectation that prices will rise, then there'll be less chance of the industry perhaps reacting in a much more pronounced way to that. Because sometimes, I've heard that some of the discussions I've had over the past few years where people have access to some historic loadings and then they make the mistake of applying that historic loading to current gigawatts. It gives you far too high a silver number because they are not taking into account that thrifting that has happened overall in the subsequent years. So I think we're quite comfortable with that. I don't think we're being too conservative. So we will see as the year progresses. For now, we are quite happy with that. But yeah. But remember, no one can hear you from the. But so let me just. Yeah. Please.
Good morning, George Paspalis from Mag Silver. Great presentation. I hope we can get a copy of it. Saves us reading the big book. Sarah, you referred to the hedging slide as your favourite slide. At what silver price would you expect that curve to change direction and people start hedging and you get an upward trend?
Wow, that's actually quite a good question. I think in recent years, actually, a lot of the hedging has been linked to producers that are undertaking, for example, expansion projects, or they are actually, constructing new projects. So, but I do see, what I have seen sort of historically is that a lot of the base metal producers, so lead zinc producers, and also copper producers, they actually like to start hedging when that price is climbing, because then that if they're hedging that silver revenue, then that really reduces their costs for their primary metal. As to what price I would see that hedging start to kick in, I've got no idea. I really don't know. I don't know. If any CFOs are in the audience, want to give me a heads up, that would be great.
Another hedging question. Jimmy Gavlin, Gavlin Commodities. How do you feel about the shareholder pressure against hedging? Like we saw back, let's say 08, 09, 10, you had clients not wanting producers to give up that exposure. Do you think with silver, is there a factor there that there's shareholder pressure still in the marketplace on these producers to tell them, hey, don't do hedging? Or is it purely, like you say, not an interesting market time, curve isn't in their favor? I just wanted to feel of that shareholder sentiment on the silver producers at the moment with respect to hedging.
To be honest, I haven't seen that so much on the silver side that there is that shareholder pressure. I mean, I know looking at the gold hedging, yes, there is that there is that pressure. Most companies, they have a limit. They'll have a board-approved limit as to how much production they are able to hedge, and as to the extent of the time period. So, for example, on the gold side, it's generally sort of 20 to 30% of production, and that might be over a period of sort of 18 to 24 months. So I would expect we would see sort of similar board restrictions in terms of the hedging on the silver side as well.
Miguel Perez Santal, Wyoming Reserve. My question is almost similar, but really I'm wondering, do you have any statistics on how much silver you believe is being held by the retail public from all this investing demand that's happened over the last 10 years? And at what price level do you expect that some of that would return to the marketplace?
Well, that's a good question. So to the first part, yes, because we have the data in terms of how much they bought. Silver is, I guess, a bit more straightforward than gold because those holdings are so sticky. So, it's rare that much of that will come out. The exception to that is India. But if we're thinking of the Western market, well, if you're thinking of the big heavyweights for the markets, you've only really got the US, what was Germany and Australia, plus India now. Well, not now, but in terms of the non-Western markets. So I think from a price point of view, those holdings tend to be very sticky. I think you did see what perhaps was a little bit surprising. You saw some coming out at the back end of last year, but that was much more, I think, from a high net worth and a strict retail. So I don't really know. I think I would be surprised, for example, if we saw $35, would some of that come out? I don't think so. I think you would see perhaps buying into that. I think one of the, if you speak to, some of the key guys in the room, they'll tell you what do they want? They want price volatility, as you know. I think, would you have some selling into that? Of course, you would have some. But I think net, I think you would have buying into that. In the Western markets, India is different. We saw a couple of years ago when the rupee price hit a record high, you had significant liquidations. It didn't come out because it's exceptionally difficult for that to happen. But the knock-on effect of that is that you had a lot of that metal in the market and therefore imports collapsed. So that was the other part of that dynamic. So I think you can see, I think quite a big contrast. if you had, again, silver at 35 bucks, I think the Western markets overall will be buying into that. Germany, I think, perhaps would also return if we say that the cost of living crisis is perhaps dissipated to some extent. If those consumers or those retail investors in Germany are now acclimatized to the new situation in terms of the sales tax as well. I think the other element, of course, was what does it mean for premiums? You know, if you were an investor in, say, I don't know, 22 or parts of 23, and you're paying, I don't know, 70, 80% over for an Eagle, now that premium is obviously a little bit more normal. Would you be prepared to go back to that? Again, this theoretical $35, that I don't know. So I think that would be quite interesting. But those holdings tend to be really sticky, and you see that also, just as a slight segue, in the ETF space, don't you? The silver holdings are also exceptionally sticky as well. Yes, we've seen some liquidations over the past couple of years, but they've been pretty modest in the silver space. Yes?
Two questions. One, oh yes, of course. Howie Flinker, Flinker and Company. My two questions are, is your other industrial demand not photovoltaic, but petrochemical? And second, is the increase in Bolivian output a record at San Cristobal? And finally, I'll add, hedging are just like hedge fund managers. When the trend is up, they buy back. When the trend is down, they sell.
So, shall I go? I'll take the first one, well, not the Bolivia one. So,
Other industrial demand, and then...
yeah, so for that, no, photovoltaics
Bolivia.
is part of our electrical series, so it's part of our electrical electronics. We actually included, because you're not the first person to ask that, which I think is a very good question. We've actually got a small focus box in the silver survey, which goes through some of the key components of the other industrial as well. The largest one, by far, is the silver oxide that's going into the ethylene oxide market. That's by far the biggest one. And then we include, I'm trying to think what we include now. We include silver oxide for the battery market, be that for consumer electronics or perhaps more industrial as well. And there are other ones in there, sort of the water purification, biocides. None of those are that significant. As I said, by far, the EO is by far the biggest, but you'll see that in the focus box. So hopefully that answers. Sorry.
The increase in Bolivia?
Oh, that's...
So the increase in Bolivia, that was primarily coming from the lead zinc operations. You mentioned San Cristobal. So they've just recently changed ownership, and it's actually quite difficult to establish what is an accurate figure there. So, I mean, we've got San Cristobal coming off in the last 2 years, but I do know that the new owner is talking about sort of 15 million ounces production moving forward. I think, from what I remember, I would have to go and check the numbers, but I think it was like sort of 9 million ounces last year and coming down to 8. But as I say, the new owners are talking about 15 million ounce production moving forward.
Okay, if there are no further questions, well, on behalf of Metals Focus and of course the Silver Institute, thank you very much for coming this morning. I guess we can leave the stage now.
Thanks everyone for being here, and remember the Silver Survey is now available on the website, or will be in a few minutes, I guess. It's available on the website, so please distribute that to your friends and family, and thanks very much. Have a good day.